Hello, everyone, and welcome to the Learn From Us podcast. As always, I'm here with Paul Gabrail, the man. My name is Seth. Thank you for joining us. We really do thank you for joining us.
We do.
Paul all week sends me texts, Facebook messages, and comments about people who are sucking up to him, telling me how great the podcast is.
And they're all my employees. It's so weird.
Isn't that great?
Yeah.
Yeah. But thanks for joining us. As always, we're here Mondays and Thursdays, delivering
Keeping it real.
Paul's take on topics of real estate, business building, and I've told you before,
Life investing.
Life investing. My life has changed so much from just meeting you in the past 3 years. I literally have. I remember the trajectory I was on, which wasn't bad.
No, it was a great trajectory.
But what you've opened my mind up to the possibility of doing things in this world, working hard, partnering with the right people. It's been an incredible, incredible journey, and we've been documenting a lot of it, some of my thoughts and obviously your thoughts in the past 35, 40 podcasts. And it's just been incredible. And I think a lot of people see this in you. They call it an infectious sort of spirit. Frankly, I love getting your take on almost anything.
Oh, that's very nice of you.
Because you just have, I don't know how to describe it. You have this a take that I want to hear.
Thank you.
Whether it's raising dogs, which you do have 4.
4.
We should have them on the show sometime.
Yeah, that would be incredible. With a lot of cords and Howard bouncing around.
We were at a fundraiser last spring for the high school that Paul and I went to, and it's called Powwow, and Beth was there. Now, this is my wife. Now, she's a very rah, very happy, cheerleading type, let's go do fun stuff type person, and they do auction off a dog, a puppy, at this live auction.
How adorable was he at the auction?
Well, they're carrying him around like...
And he's so
little,
calm.
and he's not moving at all. Just this little like armrest of a puppy, looked like a mink, soul, like a mink shoal that someone would wear. And he's going around, and Beth and I, we love sort of poking fun at Paul and just having a good time. So bring that dog over, bring Paul's dog over, bring him over. And Paul was not, he has 3 other dogs, so wasn't going to get this dog. And next thing you know, here comes the auction. I don't know what switch, but next thing you know, you started raising your little cute. Then you handed the card to Beth.
Yeah, because I don't.
And now Beth's standing up, kind of cueing on the dog, and of course you went home with. I say we. I mean, I'm always like.
Well, you came with us.
We went home with the dog in the Bentley. Sorry.
Oh, jeez.
Why do you have the Bentley, but you're embarrassed about saying you have the Bentley?
It's not embarrassment.
You don't like talking about it, though.
It's not embarrassment.
That's why
what
I
it
bring
is I have the things I have because I like them, not because I want everybody to see the things I have.
Well, that is true. I mean,
like if you look on Facebook, you don't see any reference to anything I own.
Never.
Except for the house in Mexico, I have this backdrop.
Well, I mean, come on.
It's beautiful.
But I mean, we're talking about a $25 million house. $25 million house shrunk down into an $800,000 house. Yes. That's incredible. So it should be a $25 million home, but it's just like this castle on the cliffs. That's a whole nother story. Yeah. So I'm sorry I brought up the Bentley, but it was funny.
You're not sorry, but
Howard
okay.
is the dog. You overpaid for this dog.
Let's not talk about that either.
But he's a cute dude. He's got a little underbite and
a little underbite.
Yeah, his resting motion is just like this, like this cartoonish sort of.
He's so cute though.
He's great.
And he's gotten calmer, but he's still action-packed. But he's only, 15 months old? Not even.
The point is, I want to hear your take. I come to you. So for those out there, I live in Columbus, and I have to drive up to Akron. And a lot of times we have slumber parties at Paul's house.
Oh, it's wonderful.
My kids ask me, how are you staying at Paul's house? I said, well, he has 3 extra bedrooms, so there's plenty of room. But I stay upstairs. But we come in late and end up talking late into the evening because I want your take on all this
And
stuff.
I want to make note that Seth showed up.
Precisely. I
think you were actually a minute early last night, to the point where I was like, is somebody random at my door ringing my bell? Because it still says 9:59 on my clock. And
I was supposed to be there at 10.
And there's no way this is set at 10 o'clock. Like, literally when he told me I'll be there at 10, I was like, okay, I'll see you at 10:30. And it's my head.
So I've been talking to a lot of friends that I've been introducing to you. Some of which
all great people,
who are coworkers. And I said, you better check your ass. Because if you are 35 seconds late to any event with Paul, you are on his shit list for life.
Not true.
Go on.
If you are late without any warning and you're just like, oh, who cares? Then we're going to have a problem. But if it's,
I'm glad you cleared that up.
An hour ahead, you're like, hey, I'm running 5 minutes late. Is that okay? At least you give me time to be like, okay, that sounds good. But if it's just like crickets,
and I just show up late.
By the way, when you come into my house at night, I don't care because
we're not doing anything anyway.
We're not like, it's not like we're recording anything.
We just sit around, we talk politics, we eat Skinny Cow ice cream bars and Coke Zeros and talk about.
What alcohol do you put in your Coke Zero?
Well, so folks, if you don't know, Paul doesn't drink. So it's this awkward thing. I come over, I start pouring drinks by myself like some lunatic. But I'll throw any bourbon in there. There's a lot of people in this world that can just pour a bourbon and drink it. That's not me. If you think you're better because of that, that's great. But I do like, Maker's Mark, Jim Beam.
That's right, Maker's Mark. That's the one you have there. So he bought himself alcohol and puts it in the corner.
Yeah.
And it's perfect. It's right there waiting for him when he gets to the house.
And we've been to Maker's Mark, the distillery.
Oh.
And the kids, so now the kids will be at a bar and a little 5-year-old, look, Maker's Mark, Daddy, because we dipped the alcohol. And so.
You have an alcohol problem when.
Yeah, the kids are like, Daddy, can I pour you a bourbon? No, I don't. I drink maybe 2 or 3 times a week. But anyway, where are we going with this podcast?
Not now, damn it.
So the reason I brought this up is I don't even know what I'm talking about, but I do love Paul's take on things. That's why we're here. And many people in this world have loved your take on a lot of topics.
Oh, that's very nice.
And it's really opened up my mind to a lot of political investments, tax strategies, just things I didn't really know of. And that's the whole point of all this, hopefully for our listeners. The one thing that was very exciting this week, or last week, was that you went to Florida.
Yes.
With your new love. I'm not going to bring that up anymore. I'm sorry. I saw you just.
You're not going to bring up the Bentley, the dog, new love. What else are you going to bring up?
You had a very exciting
My private
event.
jet. I don't have a private jet, by the way.
My kids are asking about when are they going to go on your private jet.
Come on. First off, people, I do not have a private jet. How do they think? I've never even been on one.
You have had aspirations.
I do have aspirations.
Of a private jet. And then Beth said, I think he gave up on those aspirations. And I said, I think he gave up on the NBA team a bit.
I have given up on the NBA team a bit.
But the private jet aspirations might be there.
That's not being given up on. Please.
Well, the boys are excited.
The boys are excited to fly Uncle Paul's private jet.
Yes, they're 5 and 8. Well, they've been on the party bus,
Oh, that's right. They were.
So
on the
one of Paul's many businesses that he's part of is, why don't we plug it?
The LimoKing.com.
LimoKing.com. You had to pay for that, right?
The
LimoKing.com is a party bus service in the Akron, Cleveland area, Northeast Ohio.
We can know Columbus, too.
In Columbus. And they have two buses now?
Yeah, two great
buses. 2
extraordinary,
beautiful, brand new buses.
Check out our Google reviews. I think we have a perfect 5-star rating with like 80 reviews.
Well, I should review it because I've used it.
You have
reviewed
it.
But anyway, the kids have been on that when we scream up to Cavs games in the beautiful Limo King bus. Yes, that's right.
And then when he ate, and then Gio ate the Twizzlers. He's like, "Yeah, I want the Twizzlers." And you're like, "Hey, Gio, you need to eat this Swenson's here, bro."
But let's get back to topic. Tell me about what happened in Florida. Why did you go down there? What the hell's happening?
So, I like talking at these events. We get on panels. We have discussions. There's a lot of, everybody thinks that people who invest are all really, really smart. And I always tell people, hey, it doesn't matter what you're doing. There's going to be a wide range of intelligence levels and personalities everywhere. You look at Congress. Here are 435 members of Congress, and a lot of them get a lot of things wrong all the time, and they don't know the things they're talking about. So I like talking about these events. I like to also hear what's going out there with the people who are buying at our level or higher. I mean, so we do these family office events. This was called Opal.
How do you spell that?
OPAL.
Opal.
Yes, Tim found it. Tim, Opal Group.
Opal Group Real Estate Investing Summit.
Are we plugging them? Yes. So Tim called them and said, hey, this is Paul. Do you want him? And they're like, yeah, we'd love to have him down here. So I moderated a panel. The week before, I got a phone call with all the panel members. And I said, guys, here's what I want to talk about. We're in a real estate panel, multifamily. I want to focus on the market. And then we got another topic about how we finance deals. So we had 3 or 4 investors and 1 mortgage broker. The mortgage broker was a real douchebag. He hogged the entire conversation, talked about gibberish. But the other investors were great because we didn't all agree. One guy just completely didn't agree with us, but I like that he said, well,
let's back up.
Yes, sorry.
Before we're agreeing and disagreeing, what did you talk about from an outside person like myself?
We talked about the market in its current condition and how hard it was to find deals.
Which you've been very adamant about.
Yes.
Now is not the time to buy. Now is the time to learn. A lot of your asset money is in cash.
Yep.
A lot of mine is as well.
90-day treasuries, baby.
I asked you just last night, when is this going to turn down so we can start buying? But anyway, keep going. So
3 of the people on the panel, not including me, so it was 4 of us in the four. There were a total of 6 people on the panel. 4 of us invest our own money. And us 4 all believed and agreed that the market was very, very, I called it frothy to be nice. And one of the guys in the panel who invests his own money, or he's very close to the family, said, I disagree. I don't think the market's frothy. And my jaw dropped.
what is your definition of frothy?
It was my nice way of saying it's a little too high. Like frothy, the extra froth on top kind of thing. It's a little too elevated.
Okay.
He said, I don't think it's frothy. And I think if Tim would verify this, I just want like this. Like people who aren't watching us on YouTube, my jaw dropped. And then he said, we think it's reckless. And I was like, oh, okay, thank God.
Oh,
so he was just
more than frothy.
Yes. And I said, and I quickly interrupted and said, just to let you know, I was being polite by saying frothy. He goes, listen, it's crazy out here. The underwriting is crazy. People are throwing out these stupid underwritings in order to justify deals. It's all nuts. And if you listen to our podcast and our deals of the week, we always talk about how the underwriting is garbage and things like that. So I liked hearing that. There was one developer on the panel. It wasn't his money, but nice guy. We first got on the phone the week before, and him and his boss were on there. And he said, oh, we love this market. We're getting 20% returns. I said, well, the market's getting you 20% returns, not your deals. And they did acknowledge, like, okay, you're right. So we got in the panel. We started talking. He pushed back a little bit, but I like what he said later. He wasn't a typical developer where, oh, I'm the best, and I'm the reason why the deals are going great, not the market. He said, you got to remember another thing. Our investors only want 7 or 8% returns over long periods of time. And I was like, and I immediately said, I'm glad he's saying this because he is doing the right thing. He's giving his investors what they want. He can justify doing deals in this market. And the other thing I give him credit for, low debt. He only finances like 60 to 65% of his deals when most developers are trying to finance 90% of their deals and leverage the tilt and be crazy. He goes, listen, our job is we put 60, 65% debt. We have deep pockets, so if things go bad, we can pay those losses. And our goal is to get 7 or 8% returns over a 15, 20-year period. He was honest about it. That's what I liked about him. I didn't agree with his investing strategy. I wouldn't do that for myself. But he was doing it for his investors who are large institutions and pension funds who want 7 or 8% returns, and he's being realistic about what that takes. We are all investing our own money and we want growth. We want major growth. The people he's investing for want stable. They want to have the number one property on the number one street on the number one corner in every city, and they're willing to pay big money for that. Great. The other 4 guys who are all investing our own money, we want the yield. We want the 25% returns. So I was sitting there saying we want 25%. He's like, well, I want 7 or 8 because my investors want that. And I loved it. He and I disagreed on philosophy, on approach, but I agreed with his, hey, this is what my investors want. I'm going to give them what they want. He wasn't lying to his investors saying, you want 7 or 8, I'm going to give you 20. His comments probably like, listen, we're going to get 20 sometimes because the market's so good. When the market's bad, we're going to have to fund the deals. But over the long haul, we'll do okay. And I liked that. That's what I liked about the event. It was a lot of different ideas flowing in different approaches. One of the guys in the panel I thought was way too conservative. Like even me, I was like, bro, how are you doing any deals in this world if you're underwriting like that?
What was he doing? Describe it.
Not to get too much into it because it might get a little too technical, but he was basically assuming that if he bought a property today, 5 years from now, the same valuation metric, he's willing to do 20% lower, which is worse. And I was like, 20%, like I thought that was a stretch. Mm-hmm. And one of the guys in the panel said, like, how many deals are you doing? Which I don't think is the right argument because that argument back says you should pay whatever it needs to do to get the deal done. That's not the way it is. But I did think his 20% lower is a tough pill to swallow. But hey, it works for him. And I don't know his wealth. I don't know anything about him. But if it's what works for him, it's what's worked for him. Now, he wasn't criticizing anybody saying, oh, you're stupid for doing these things. But I like the fact that we engaged in a conversation about the way we view the world. I love the fact that the one guy said, the underwriting out there is terrible. Like, there's a mutual friend of a mutual friend of ours who manages money for a wealthy family in Canada.
Do I know him?
No. And I don't I don't think he understands real estate and underwriting because he looks at whatever somebody gives them and goes, well, they're experts. They say this is what it takes to manage the property. This is what it takes. It's like,
basically every deal of the week we have,
correct.
You guys criticize the underwriting, what they are telling you, what they're not.
Correct. And he just buys into it because he has a 20-page Excel sheet that says, oh, according to this, and this, it'll be fine. And I'm like, okay, sounds good. But I like the fact that we had an engaging conversation, that we all had different, 3 or 4 of us had similar viewpoints, but there was a guy who was drastically different, but his job is to do deals. Now, the funny thing is when he explains some of his deals, then you realize they're putting very small pieces of equity in and they're getting major deal fees. So they have very little risk in the game. So you have to also account for that. More power to him. I told, it's funny, he said to me, he goes, would you do this deal? I said, all day long. All day long. I remember when he said that, Tim? He said, would you do this deal? I said, all day long. Because his deal was a good deal. He put up $2 million in equity and they got $10 million back in fees in about a year. Would you invest $2 million in a deal to get $10 million? Of course I would. I wouldn't even blink an eye at it. So it was just great. I mean, because we always have we sometimes have these panel discussions, and some of the guys there are just arrogant pricks who think because the market goes well, they're geniuses. A rising tide raises. It's like if all of a sudden I sat there and said, like, I started on third base and thought I hit a triple kind of thing. You know what I mean? It's like, come on, give me a break. Let's pump the brakes here. So, to beat a dead horse all the time, I go to these conferences to get a feel for where people are, because this is supposedly the smart money, which I don't believe in the thing called smart money. But these are the guys who are talking about real estate deals, and I wonder what they're doing, and they all have a hard time finding deals. Like one of the guys was telling me he had to buy a deal in Branson, Missouri. You know what the population of Branson, Missouri is? It's like 12,000 or 15,000 or something. That's I would never buy in a town.
Shout out to Branson, Missouri, all our listeners in Branson.
But I wouldn't buy in Branson because of that. It's too small of a market where I really have to understand. Now, maybe it's a small pocket.
People say that about Akron now.
But Akron's 400,000, 500,000. It's some several.
Not the market size, obviously, versus Columbus. The real estate it's not going to flirt.
Yeah, what do they say?
Like, obviously, Columbus is a hotbed for people moving there, real estate expansion.
Yeah, it's growing.
Like, my father-in-law flips houses, buys and rents houses, and he is just very adamant that the same deals can't be found in the area that we're in.
In Columbus?
In Akron right now. He's up in here. He's up in this area.
What do you mean the same deals can't be found?
The same profitable deals, flips, and...
I would disagree.
Really?
Of course. Everything goes in cycles, and Columbus is growing like crazy, but you know what else? It can grow like crazy because Columbus is all land.
Yeah.
It just goes out and out and out and out and out. That's why Columbus, if you go look at its historical real estate prices, haven't gone up a ton. For a city that's growing over 1% a year, and one of the few cities in the country with this is a few years ago, so I don't know if it's still true, a decreasing median age. That means a lot of young people are moving there, and the real estate prices don't jump up astronomically. Why? Because, hey, if you want to build, just go out a mile further, half mile further.
Sure.
There's no lack of supply of land. The same thing, but why does Cleveland have an issue? Why does Cleveland appreciate pretty decently? Because half of it's water. Yeah, it's just water and then you're not going to go an hour and a half out to be considered Cleveland. You know what I mean? So I look at that stuff saying everything's and again, we go in cycles. Maybe your husband, father-in-law is right, and maybe right now it's tough, but I don't know. I just don't. I think I actually like Akron. It's actually just started growing again. I mean, very small though. We're talking about I think in the last year it's gained 700 people. I mean, not a lot at all, but still, it's better than slowing down. But I look at everything as, let me find the deal that makes sense, and I will factor in some market issues in there, like Youngstown, Ohio. If I bought in Youngstown, I'm going to factor in losing population every year, and hopefully that makes my returns better because I'm able to discount it so much because nobody wants to be in Youngstown because it's losing population. It's just, everybody has to realize that price determines everything, and you can't just dismiss something because of growing versus not growing versus jobs versus not jobs. You have to price it the right way with all those risks.
Go back to the panel. How many people were in the audience for this panel?
Well, there were 300 people at the time out. When I've done these panels before, there was only one room for an audience. So there's 300 people watching. This one it started out with like 30 and then maybe grew to 50 or 60. Tim?
Yeah, probably about 60, but there was 4 sessions going on
at the same time.
Plus one-on-one sessions.
So they wanted to segment it the full crowd into
which I don't like. I mean, I like when we did these other conferences, we'll have 300 people in a room, and you get a lot of engagement. You get a lot of questions.
Were there some interesting questions?
Well, the first guy goes, well, I agree with everything you guys said. And I immediately interjected and said, well, we've said very different things. And everybody got a good chuckle out of that. But it was just it was just going to show, like, I'm willing to call somebody out for making a generic, stupid statement. The guy says, well, I agree with everything you guys said up there. I'm like, well, we all said different things. Which one did you agree with? To say that we all are right versus wrong, I mean, you could make that argument. But the funny part is the guy who was most different than us, I agreed with him more than the other guys who agreed with me more because we had different views of the way in which we did our deal. So, I don't remember any questions standing out as being great.
What did you learn after coming home from this conference? What did you learn about?
I learned that Palm Beach is very expensive.
Pardon?
I learned that Palm Beach is very expensive, and the house that I'd want would be $25 million.
Yeah.
Not to be cheesy, but it's nice to see that there are people out there who are willing to be honest about why they do skinny deals. When I hear people justifying doing bad deals, but saying that I'm not understanding something, that really bothers me. But when they say, I've got money to deploy, and either I deploy it or I lose my job, I can buy that a lot more than I can buy, well, you're just not looking at the right deals, Paul. It's like, no, I am. You're just looking at them wrong. But if you say, Paul, I'm paid to do deals. I got to do deals. I don't know what the future holds. So if I deploy money and it works out great. We have enough capital where if it doesn't work out, we'll be fine. I buy that. I buy that 100%. That will be my mentality at some point in my career. But in the meantime, I'm 37 and I still have a lot of growth to do. When I'm 77, I will be thinking more like, okay, how do I buy the best properties in the best markets so that way if I choose to leave the money to some foundation or my trust or whatever, it'll always be safe. I'll put 50% debt on there and have a good asset. But some people aren't willing to be honest about that. Some people want to sit there and edify themselves and say, I do great deals. No, I just do the deals. I'm willing to pay more money to get the right deal for me, and I'll make less money because of it. Great. You know, it's funny, Palm Beach, we went and looked at apartment buildings the first day to view them. Palm Beach is this hot, growing area, right? Everybody loves it. It's expensive. They're giving away 2 months free rent to get people to move in. And I was like, that's weird. Our rinky-dink Class C property in Columbus that we're rehabbing and filling up, we don't give any free rent.
Right.
So here's Palm Beach, $3,000 a month in rent. Here are rinky-dink apartments, $775 in rent. We don't give free rent away. They do. Somebody might sit there and say, well, yeah, because they're $3,000. It's like, well, but that's the whole point. There's a price for everything. If they were $4,000 a month, they'd have to give away 4 months free rent or 5 months free rent. That's my point. Pricing determines everything. So it was nice to see that some of the 500-foot view things that I believe are probably pretty accurate. I'm still trying to figure out the more intricate details of real estate, but
when people hire you to consult with them on their real estate deals, which are going to be helping me this year, I'm going to be getting some equity back from selling my house, and I'm excited what we can do with it.
Yep.
But when people hire you to consult on deals, which we have some exciting hires of late.
Yep.
What's the barrier? What's the initial barrier for new folks that you try to instill in them?
What do you want? Because I will help you buy. If you said to me, I want the best property in the best location and I'm willing to pay a premium, no problem. But my job is to help you with understanding the risks of that.
Yeah.
That's the most important part. I will help you buy any real estate you want. I can do that. I believe you will do better in real estate by hiring me, whether you're buying Class A, Class C, Class D.
How could that be argued?
Right. Well, I mean, I'm sure somebody could argue it, but I think
if you're new.
Yes, if you're new. But you have to understand, what do you want? You know, our
well, my clapback is always, I don't even know what I want. I never knew what was possible.
Then we need to start from the beginning. Okay, Seth, if you had a property that didn't cash flow very well, but it was the best property and it was always full, would you be happier, or would you rather have a property that was 20% vacant but cash flowed very well?
The latter, I assume?
I don't know. Whatever you want. I'm not telling you there's a right answer.
What's right and wrong?
I'm not telling you what's right and wrong. I'm just saying to you, what do you feel most comfortable with?
Right. Well, I would probably even need your guidance as to what I should feel comfortable with.
Well, you're buying a new house, right?
Yeah.
It's a little more money than you're spending than you have at your current house.
Yeah.
So to me, if you're stressed about that, which I'm sure you are, it's a lot more money than your current house.
Sure.
Maybe you should focus on cash flow more. Maybe. But if you sit there and say, well, no, you know what, Paul, I make good money in my business. I have a lot of other things going on that haven't even started making me good money yet, and I know they will. I'm willing to go invest in a property that I know that over time will always be full. I'll pay down debt, and it might appreciate a little bit better. Okay, let's go talk about
Well, we
that.
talked about me potentially being somewhat of a guinea pig, like a live on air Let's Talk podcast guinea pig about. I mean, if all goes to plan, I should have a good amount of capital to work with. We've talked about partnering on deals, or maybe getting one myself. The idea of third-party management. Remember, Shipe texted us about.
Yeah, that was funny. What was that all about? That was so funny.
We have a friend. I'm sure he's
great.
listening. His name is Eric Shipe. He was Mr. Bulldog for Green High School in the year 99 or 2000 as a running back.
He has got a phenomenal basketball jump shot.
He's just one of our most interesting cute little buddies. And he's been the butt of a lot of jokes for a lot of group of people, a lot of people that I hang out with, all of our friends. He's just
he's a good dude.
He's a really good dude. And
I think all of Seth's friends, like, I don't think there's a single friend of yours I dislike. That's a very rare thing.
Well, listen,
Except for MJ.
You know,
I hope
you're a
he's
little
listening.
polarizing.
Oh, I'm very polarizing.
When you meet people,
they either love me or hate me.
yeah. So, but I'm now.
They all like me, don't they?
Of course.
Well, not of course.
But it was important to me that
yeah.
I know I wouldn't call you. It's either I get into this. I don't know what else to call it, so I sort of say I wouldn't say standoffish because I don't want to say standoffish.
I don't think I'm standoffish.
That's my point. Yeah. I don't want to say standoffish, but that's the only one I can come up with.
So poor Darnell, who I love very much, that poor guy.
Darnell Sanders of NFL Landscaping in Cleveland.
He needs to plan events if he wants me there on who else is going to be there.
Okay. So now we know what we're talking about. Like.
That poor guy. He's got friends. I'm like, is this person going to be there? Yeah, I'm not coming. He's just like, Jesus. I'm like,
yeah, so that's what you are.
Yes. But your friends are all great.
Well, so it was very important to me that if I, introduced you to a friend of mine who was very close, it was like, boy, I hope that, there's a mutual, likability there.
I'm having dinner with Shu on Friday without you. We're gonna invite Shipe and MJ.
Wow,
Dusty too.
I do know that now. I did listen. Talk about FOMO. Is that now you're playing basketball with my friends and I'm not even there?
Is that bothering you?
Well, I mean, deep down,
do you want to help me to do that?
I'm not loving it.
Well, I'm sorry.
But anyway, how did we get on that topic? I have no clue. But third-party management was one of the.
in his text.
Yeah, one of the. So where am I going with all this? We digress, folks. I'm terribly sorry. We are going to follow along my journey, and you can see what a total idiot does with some capital and guidance from a personal trainer coach in real estate.
And the best part is, the total idiot will probably do pretty well. And by the way, you're not a total idiot. You have a PhD in chemistry.
Well, real estate idiot, though.
Maybe. By the way, I didn't like, speaking of our texts, I made the jab in the group chat about Real Doctor, hoping that you would make a comment. You did not. So Seth has a PhD, but his friend MJ is a real doctor, as I call it.
Anesthesiologist.
He's an MD. So something about basketball, he said, I am on call.
Oh, yeah. MJ said, I can't make it to basketball. I'm on call. And I said, what did I say?
I said something like, we get it, MJ. You're a doctor. And then something happened. I said, well, at least you're a real doctor or something like that. And then Seth did not respond to that.
Because Shu has a PhD.
Yes. Dusty does not.
Dusty does not, which we constantly bust
he's
him
the smartest
up.
guy in the group.
Harry has a PhD, a friend of ours. So, yes, my buddy MJ is an anesthesiologist, but we do poke fun. Like, we'll have all groups of children together. One will fall, and I'll just turn and scream, is there a real doctor in the house? I don't know the difference in doctors, but where are we going with this? People don't want to hear our
They
shtick.
do, I think.
Okay, fine.
And by the way, I want to apologize to Harry. Harry, you're not in the regular basketball chat because you never come to basketball because you don't want to. So I don't want Harry thinking he's just like the redheaded stepchild.
I'm sure he'll text us and call us. And
Harry's already calling you right now.
let us know. Yeah. So anyway, I don't know how we got on this topic of that. I would be
third-party management because you want to buy properties. We're talking about third-party management.
So we're gonna go through sort of a real live coaching sort of program with me,
because we can't do that with you because not everybody wants to be
in the spotlight and on a podcast. So,
especially when they're learning something new, but you're going to learn it great.
Yeah, so you'll learn. That's why I asked you to dumb down some of these thoughts that you say and figure this out. So
if I can't dumb it down, then I don't know what I'm talking about.
Do you have any upcoming conferences you're speaking at?
Tim, do we have any upcoming conferences I'm speaking at?
We'll get toward that.
Well, yeah, we'll have to work on that. But it's fun because the other thing is I get to take people on a trip. We have a good time. We eat out. It's kind of like a mini vacation. We rented an Airbnb in a pretty decent
I can imagine you and Tim just cuddled up watching popcorn, Gilmore Girls.
Well, you know what's funny? I felt bad because we all went to bed early and Tim's like up late, and I'm like, and then the first night or second night, I took the keys to my room with me for the car, and he left his charger in the car, so he texted me and said, "Hey, can I have the key so I can go open the car?" I saw it at like 6:30 in the morning, and I'm like, "Oh, I'm so sorry." So I texted him back, and it said it wasn't delivering because his phone was dead. So I felt awful about it, and he was just like, he had to FaceTime his wife, and he couldn't do it. I felt bad. Oh no, you were FaceTiming her at the time.
I did it through on my laptop.
Oh, that's right.
He got it done.
Yeah, but anyhow, it's a great trip. We have a good time. I like speaking these things. It gets me more comfortable. I mean, the first time I did it, Seth, I was like shaking. I was so nervous. Now I just go up there and I'm like, all right, here's what's going to happen, folks. We're going to talk about this, this, this. And if you don't like it, you can go fuck yourself.
Your confidence level's getting...
Oh, for sure. You know, when I first started at Wall 6 years ago teaching, I remember being afraid to talk to those kids. Now I just walk in and I'm like, all right, here's what we're going to do.
You're still doing that?
Oh, yeah. We have the last class of the year in 2 weeks. It's a great time.
Yeah, that's incredible.
I hope these kids like just remember a few things from the class. We'll talk about that. But anyhow, you're gonna do great in real estate, Seth.
I'm excited.
You and Beth will do great in real estate.
Yeah, Beth is slowly getting on board the idea that, you know, if you can get a house, so she's worried about the new house, the mortgage we're going to take on. We're transitioning from the idea of don't pay that house off early. I'm sorry. There's multiple ways to skin a cat.
Yeah.
But one of the ways you say is using smart debt to your advantage.
Yep.
And we're going to try and do that with the new house.
Yep.
Take some equity I'm going to get with the old house and do something with it. Because like I said before many times on the podcast, my only goal prior to meeting you was maybe retire, hopefully pay for some of my kids' schooling, and pay off my house because that would be a really great feeling. And I go back in my mind to those days where I was thinking of paying off my house was so incredible. And I realized that I would be doing nothing with any extra money until 17 years from now, and then at that point in time, I would get $1,700 a month back. That would be when I could start.
It wouldn't be though, because your $1,700 a month includes taxes and insurance.
Yeah, you're right.
So it'd only be like $1,200 a month you get back.
So 15 years from now, I would get $1,200 a month when I'm 50-something years old, and that's when I could finally do something with it.
Yeah.
Or just potentially refinance or take equity. Don't put all.
And can I make another caveat?
Go on.
You're already successful with a business. You already have good savings. You're putting a good amount of money down in your new house. Seth's being smart about the debt. He's not sitting there saying, okay, I have no job, I have no savings, and I'm buying this $1 billion house that I'm borrowing $990
Boy,
million.
no savings is huge, man. I talked to
A lot of people have no savings.
I
man.
talked to photographers, and it is amazing.
Well, it's funny because one of the first few times I talked with you, you're like, yeah, I don't really have a good savings. Then you told me, and I'm like, Seth, that's really good savings. You're like, really? I'm like, yeah, good for you. Good for you saving up that money. And I mean, could it be better? It could always be better. My saving could be better, but it's just, you know, I was very impressed.
Of course,
with the
it could
number.
be better.
Yeah.
Yeah. So,
Like when you said you had no savings, I imagine you had like $20,000 in a mattress somewhere.
I think that's even some savings.
That's even
from what
some
I'm
savings.
gathering from people
Yeah,
who
people
are
don't have
30
anything.
years old and older.
They have no money.
Yeah.
And Seth, yeah, you'll be. I mean, I'm not trying to be
Sure.
uncomfortable, but you'll be a multimillionaire when you're 65, easily.
You should tell Beth because she's very worried.
Well, we have to sit down and talk with Beth because you know why she's worried? Because she doesn't know the facts and they understand it. And that's fine.
And it's taken me a long time to understand it. But
Yeah.
my point is Beth is actually
she did
getting
pretty
on
fast.
board. She's loving the idea that if we can get a property that can potentially help pay off that mortgage or at least reduce our monthly cost of that mortgage while growing, she's now starting to speak your language.
Yeah. And by the way, you picked it up very quickly. You were not slow to the uptake. Is it uptick or uptake?
Uptake's a word.
Is it?
Yeah.
But is the statement so? Anyways,
Don't know.
No, but Beth, and we'll talk about it. And by the way, if she doesn't feel comfortable and she wants to, we'll talk about that. You guys are a partnership, and you have to figure that out. But you know, new ventures come along, and don't start with 5 rentals. We'll start with 1 or 1 flip, and we'll figure out how it goes.
We are having, Paul's having dinner with a friend of mine and his wife, dear friends of mine.
Yes.
And
The other PhD.
yeah, and maybe we can document that story too.
Yeah.
The reason I love documenting stories, if you're listening, and I think I'm addicted to stories.
Yeah, they're great.
Any story. Like when Sports Center, I I'm not one of these like holier than thou people where I don't watch a lot of TV. I watch TV.
Yeah, we all.
And if I'm scrolling through in Sports Center or ESPN has one of these 30 for 30s about someone I've never heard of ever, they start that slow music. They show some of the B-roll of what's going on. Next thing you know, like, I'm in.
Yeah.
I love stories. And so I think everyone loves stories to some extent. But so I'd love to sort of document you helping other people and how this works. Because you're absolutely right. There's no question. If you would help me with real estate, I'm going to do much better than trying to go at it my own.
And if the market does get back to reality, we don't need a crash. We just need, you'll be better prepared to go, no, I understand why this happened, and I'm even more comfortable now investing. Because usually when prices go down, people go, oh, prices went down. I can't do, because they don't understand why prices go down.
Yeah.
And then we're also going to talk to Ryan on Friday about how he shoots 98.4% from inside 20 feet.
Basketball wise.
Yes. The guy does not miss inside.
We're playing tonight.
We are playing tonight.
I'm 38, folks. Just had a birthday. My wife just had a birthday, and I played basketball on Sunday with some younger kids, and I hardly got out of bed the next day.
How old were they?
They were like mid-20s, but like I don't know if you have this with tennis and your basketball, but I didn't hurt anything during the game, but afterwards a lot of things felt like I did hurt. Oh, I might have twisted my knee and my ankle. I was chewing a leaf like they were Tic Tacs. And
so can I make a comment? And you're probably not going to like it.
Go ahead.
I work out twice a week, and I play tennis, so I don't get the aches the next day as much as, when I didn't work out as much and I played basketball every once in a while.
And I think that's the difference, not to make an excuse for examples. Like last night I wanted to arrive at 10, and I was okay with arriving later because right before I left, I picked up a glove and played catch with my kid for like 10 minutes. And I was totally willing to let that make me be late in life. And so let's not get into working out. But yes, I know you're very active.
I don't mean it to be like, oh, look at me. I
sure.
I hate that. I'm just sitting there saying like, hey, if you did a lot more, you would not ache and you would not have aches.
Some of my friends want me to get into CrossFit, and it's like, no way, I'm not going to kill myself trying to power lift all this craziness.
CrossFit, it's not 2014. Give me a break. Like CrossFit was the thing. Remember on Facebook?
But it's still big.
It's big, but on Facebook in 2014, 15, 16, all you saw were CrossFit posts.
You should be a CrossFit model on Instagram. Just show all
Well,
photos.
Well, it's funny. Fit Active Sports is based on CrossFit to start was what we created it for.
Paul and Rahman from one of our Mexico podcasts, probably in the 20s, Tim, 20-something. Go to fitactivesports.com for all of your weightlifting gloves and accessories, straps, bands.
Sleeves, elbow sleeves.
All that stuff. Thank you. Podcast 17 is a wonderful story about Rahman in Atlanta rocking Fit Active Sports.
Rahman rocking.
The number one selling weightlifting glove on Amazon.
That is correct.
All right, guys.
We had a record day 2 days ago, by the way.
Yeah, how many units in a day? Like,
well, we sold
it's overall. It's got to be like 600 units or something?
No, we did 484 that day, I think.
So I tell people in that podcast, 2 years ago we sat in Mexico and Rahman was doing like maybe 24 units a day.
Yeah, probably something like that. Maybe 30. Maybe 30 or 40.
And now it's 400, over 400. That's amazing.
His average in the last month has been like 360, but the last few days has really skyrocketed. So I wonder if some of his other products are taking off right now.
Amazing. FitActiveSports.com, learnfromus.com. Follow us on YouTube. Like, comment, and subscribe. If you want to argue with Paul in the chat below, he'll argue with you. You love when actual business owners reply to.
Oh, absolutely.
You love that.
Yeah, listen, it's because they might say something that has a valid point, or they're missing a point I'm saying, and it's just a matter of clarification. Now, I don't like the people who are like, "You're a greedy asshole, F you," and I'm like, okay, like I'll do the Tim. All right. I mean, that's not going to go anywhere. So.
Thanks for joining us, everyone.
Thanks for having us.
Tune into our podcast on Mondays and Thursdays.
Bye.
See you soon, Paul. Bye.